How's it going, guys? This is Forensic Forex with Yante, and I'm back in another video. This is episode 24 to the Asian Session Library. Once again, with the same pair, US dollar versus Japanese yen, we had a successful Asian Session model on Thursday, the 11th, January 2024. Let's walk through it together. As always, we're not looking to trade in this time period. We're utilizing the swing points here to formulate a trade idea in here. The whole point of the model is to catch retail traders off guard, to be counterparty to their trade. So when they're buying, we're selling. When they're selling, we're buying. And let's take a look at how you do it. So we have the swing lows here on the 15-minute time frame. And we're taking the ones that are unbroken because this is the obvious areas of liquidity that we have available before 8 p.m. Swing high, which is going to be buy side liquidity. And we got multiple swing highs here, so we'll just mark them all out. And that's the last one there. We're waiting for one side of the market to be broken or purged and then anticipating a revert back to the opposite end. Let's take a look at what happens. Price opens and runs up. Takes out the 15-minute swing high buy side liquidity. At this point, this is where I would go down to the lower time frame and look for my entry technique. I'm going to mark out the opening price because it is crucial to understand where we are in price. Are we in a premium or a discount? This line in the sand tells us. We don't need an indicator to tell us where price is overbought or oversold. If price is above this opening price, we're overbought, which means we're in a premium. So ideal sell scenario should be unfolding above that price point. The entry technique, as always, many people ask me, why do I take that specific fair value gap? Well, it's because it's the one that I find to be most consistent and the one that gives the most dynamic reaction off of. So we're looking for a fair value gap that breaks a swing low, and it forms here. And you zoom in closely to see that. So right after purging that 15-minute swing high here, there it is, transcribed on the 1 minute, while being above 8 p.m. opening price. So the entry technique is forming where? In a premium. We want the entry technique to form in a premium because that's the best sell scenario for us. Best case scenario, sell high. That's always been trading 101 rules. Sell high, buy low. In this case, we're going to be selling high. We're going to go for a 1-to-1 scenario as always. Nothing changes. We're looking for 15 pips as a stop loss and 15 pips as a TP. Get that marked out. That's it. And now we're waiting for price to trade back into it. There you go. We would be short. And 15 pips would be acquired there. So that's a successful Asian session model. If you don't get 15 sometimes, minimalistically, getting 10 is ideal as well. You could scale out there, take the 10 and hold to see if you get lower prices and have a trailing stop. And if you play it out to see what unrealized gains would be, you can see it drops even more. Now, just a bonus for this video, I want to show this as well because I talked about it in another episode. There's a 15-minute swing low here that forms outside of Asian session right here. So that's sell side liquidity that has been ran through. So overall, we can see how price went to a buy side and then went right down to sell side, leaving a premium range going down to a discount range because now we're below the Asian session open. If you go back down to the 1 minute time frame, I know I said this before, there are times where the market will give both sides of the setup, a sell setup and a buy setup at times. Here, in this example, you're going to see the buy setup forming as well. And you can see how it continues to draw for those sell side liquidity swing lows. But here we can see price gives the same entry technique, just opposite. Instead, it's a fair value gap that breaks a swing high. So it's inverse. There you go. And just to see in a teaching moment or a learning moment, just to see how it just plays out, price dynamically respects that fair value gap in that zone. That's why I like to take this entry technique. At times, yes, you will endure some drawdown, but oftentimes it tends to be dynamic and it really respects that zone and gets away instantly. We can even see that this trade idea happens very early in the session. This took no time at all. This entry started and formed at 8:17, and then we got the entry at 8:21 p.m. and we were able to hit profit at 8:38. So really quick. So as you go through the series, you watch the episodes, you can see how sometimes it takes a little time. It happens a little later in the Asian session, and sometimes it happens very early in the Asian session. So there is no excuse to not be available for the session. So if you want to be in these trades, you got to be there from the start to the end. There's no excuse around it. You have to make sacrifices, and you have to move your life schedule around, or you have to work something out so that you're available for these hours to get these setups. And you can see how price comes right back to Asian Open right there. And notice how price sells off from that level. And you got more unrealized gains if you were still trailing your stop, or if you didn't move your stop and you believe that it was going to continue to trade lower. As we know as well, we said this before, Thursdays, for some reason, some particular reason, it tends to trend a lot more than 15 pips on Thursdays. And so far, we can see that it was a successful Asian session model, and we're just being consistent to the model. We're not changing the steps. That's the whole point of being consistent to one model. Before we go, I just want to show you guys that we are tracking this in a spreadsheet. So a key is that the max, when you see this asterisk here, that means that price did not hit stop loss and there's still unrealized gains, and it could be beyond 40 pips, and we haven't come back down to the stop loss. So we're still tracking the unrealized gains. At the end of the month, we'll track to see what this trade got to in pips, and then do a total calculation for the month. You can see the rest where we gained some pips, minimalistically 10 pips. I check it off, and if price came back down to stop loss, that's the max gain. Same thing here. This one's still unrealized, it hasn't hit stop loss yet. This one we took a loser, 20.48. So that was the max before it came back down and hit the stop loss. So hopefully this was insightful. Once again, just stay consistent to a model. Consistency beats skill. Peace.